Hi, welcome to the Market Alert for Friday, the 3rd of January 2020. So, stocks, bonds, silver, and the dollar all saw as 2020 starts. Just buy it. Something that I've been saying for a long time in this Market Alert, because that's the objective of the powers that be that are manipulating the stock market and want to move it to the upside. So let's start off by having a look at the daily chart, and yesterday you can see that prices moved strongly higher. Most of the heavy lifting done in the pre-market session, which we'll look at in just a moment. And those observant amongst you will also notice that prices are down on the overnight after leaving behind a new all-time high close to the 29,000. Like I say, 30,000 for me is on the cards for this market. And the reason the market is down on the overnight, from what I can see, is the only news, both reported on Zero Hedge and on the mainstream media, is that US forces killed top Iranian general in airstrike on Baghdad airport. The market doesn't like war because it creates uncertainty, which is probably why we're seeing the market down on the overnight. However, as we saw in 2003 when Blair and Bush took on the Iranians in their illegal war on no weapons of mass destruction. Yes, I did say no weapons of mass destruction. And the market then moved higher. So, yeah, that's how it works. So a bit of uncertainty is going to send prices to the downside. But yesterday in the Dow, as I say, most of the move was done in the pre-market session. We see 7 a.m. yesterday after we had 76% retracement, and then all of the work was done. 100 points higher, bit of a pullback and some resistance here as prices found a bit of resistance at the 28,700 level. They had a shakeout. This is not surprising either. A shakeout to begin with as people come in and sell their stocks, having moved the market to the upside, move the prices higher in the individual stocks, and then get rid of some. You can see there we have prices coming back down, sitting on the 200 MA. Before then, as ever, we see prices moving to the upside. And this can continue for me because the price pattern is predictable and it's very tradable. I don't have a problem with this at all. Price is trading up to the high there of 28,000. Well, we can see this is going to be the high. This is the overnight now. I just grabbed this. We've seen it in the daily chart, but this is where it took place. And I'll just get rid of that. Stop it extending right so we can read it. And there we can see 28,910, where prices then decided to fall from. You can see that trading all the way down. We've dropped 100, 200, 250 points on the overnight. So don't be surprised now if we see support coming into this market and prices then making their way back to the upside there. News today. Let's have a quick look. US 3 p.m. ISM manufacturing is out, and we've also got the FOMC minutes as well, with Kaplan speaking, not Powell. So, and he's speaking at 8:30. So 7 p.m. you may get a bit of movement. The non-farm payroll figures are out a week today. Meanwhile, in the implied volatility, we see this drop by a full percentage point, or just under 11.53 down to 10.54. And yes, this is going to spike back up if the market remains to the downside, because obviously the options markets were closed when the Dow sold off last night, or the futures have sold off. And again, you can see coming back down into these areas where we have previously seen corrections. But at the moment, they don't want the market to correct unless the sellers do come in and say, right, we're taking the money off the table, and that could quite easily happen. We are due for a correction, but longer term, we're going to try and keep the market moving to the upside. So let's see if the weakness that we've seen overnight continues throughout the main event at 2:30. even if the market rallies between now and then. And in Bitcoin, we have seen, we'll start off with the daily chart, we remain sideways as we have throughout the last couple of months, and in particular through the festive period. But yesterday we had a bit of activity, which we can see in the 4-hour chart there. Prices spiking to the upside. This is the overnight actually. Yesterday prices moved sharply lower. They found buying as the market was tested, and it's been brought back on the overnight, which you can see here. So yesterday, as I watched this market, it just traded in that $50 range, and obviously it's worse than watching paint dry at the moment. And then the market, of course, drops down $200 before coming back and trading in a sideways range once more. However, overnight we had a bit more of a shakeout, which you can see here, and then the volume also indicating that the big boys were in buying back, and they brought the price back $350. But the market's now trading in a very narrow range once more. It's a very frustrating market at the moment, continues to be, because the volatility is sporadic. It's when the big boys move in that we see any sort of activity. At the moment, prices moving lower, shaking out the week longs and then bringing the market back. That's been the pattern for the last couple of months, which is clearly seen here in the daily chart, very quiet. And the weekly chart also going back for the last few months, very quiet indeed. But it's worth keeping an eye on, because once the volatility picks up, it'll be a good one to trade. And then finally, let's have a quick look at Deutsche Bank. Obviously, as I've said before, is receiving part of the repo funding, in my opinion, and price is being held higher given its poor performance business-wise during the last year or so, and also the massive derivatives that they have on their books, making it a very dangerous cocktail as well. But at the moment, prices being supported no doubt by the Fed, as I've noted in previous market alerts there. And just before we conclude, I just want to share this with you as well. If you have a look at this is the Dow monthly chart, and we're looking at 2009 here. This, to be precise, this is March of 2009 when QE started. And you can see the huge move in the Dow. And if we are to measure this from the low, it's just approximate. And you can see there that we have a massive 22,000 or 22,500 point rise in this market from March of 2009, which of course is 11 years. So a massive rise. And you can see the corrections along the way, and eventually, of course, what will happen is the corrections will happen, and in most cases you'll see here where previous corrections, the markets came back to the previous lows, which will be devastating for this market when eventually it does and is allowed to find fair value once more. But it's going to be one hell of a ride to the downside when this does happen. When, who knows? But certainly as night follows day, it will happen. That's for sure. It's just a matter of time. But when you see it like this, I certainly wouldn't want to be investing in the stock market at these levels. That's for sure. There is not enough on the upside to do this, especially once we get to the 30,000 level, which we're not that far away from either. So I thought I'd just show you this, just to give you an idea of how much money's gone into this market. And there are charts, and I'll see if I can find some for you, where you can see that the QE money is what's moved this market, not any sort of recovery whatsoever from 2008. I'm just going to look for something else for you as well. Yeah, here is the start of the Iraq war as well, and this started the credit boom, the mortgage, toxic mortgages and everything else under George Bush. when they went to war with Iran with that criminal Blair as well. And you can see what happened there. The market came all the way back. I'm not saying that the Dow will come all the way back, but by Jove, if it did, it would be one hell of a ride to the downside. More likely to be 50% of it when it is allowed, of course, to move to the downside there. Okay, that will do it for this one. Don't forget the FOMC this evening, and also keep an eye on prices coming back in the pre-market session, as that's the objective of the criminal outfits these days, to keep the markets on the highs. And with that, have a great weekend. Thanks for watching. See you in the next one.